Welcome back to Forex Signals TV. I'm Shane Vernier, trading coach at howtotradeinforexsignals.com. Do you know what Fibonacci retracements are? Do you know how to apply them in the live market? By the end of this video, you will. So what are Fibonacci retracements? They're a measurement tool based on the Fibonacci sequence. Think of Fibonacci retracements as a tape measure. We use them to quantify a move in price. This helps us immensely when determining trend strength and determining future market direction. Unfortunately, many new traders use Fibonacci retracements incorrectly. Common mistakes are poor location and applying the sequence backward. In the next few minutes, we're going to show you the right way to use Fibonacci retracements on your MT4 and Trading View platforms. Fibonacci retracements are a measurement tool based on the Fibonacci sequence. For now, we aren't going to take a deep dive into the nuances of Fibonacci numbers. What we're here to do is to learn how to use the technical tool in the live market. Basically, Fibonacci retracements are products of Fibonacci ratios, which are derived by dividing numbers in the Fibonacci sequence by one another. Honestly, it can be very confusing, and we're not mathematicians, we're traders. If you're interested in learning more, be sure to check out Tom Chen's great article, How to Use the Fibonacci Retracement Tool, over at howtotrade.com. Now, Fibonacci retracements serve two primary purposes in the market. First, they help us to identify trends. This is done by examining the location of price with respect to the Fibonacci levels. Second, they help us establish concrete support and resistance zones that we can actively trade. For the purposes of our discussion, we're going to focus on the most important ratios: 23.6%, 38.2%, 50%, 61.8%, and 78.6%. These will be the basis for our Fibonacci retracement levels and trading methodologies. When we use Fibonacci retracements, there's one primary thing to keep in mind. We begin and end the retracements at periodic extremes. This is a simple but critical concept. Accurate positioning of the retracement tool is vital to deciphering key levels. If we mess this up, our levels will be next to useless. There are two essential tenets of applying Fibonacci retracements. In an uptrend, we begin from a low point and work toward a high point. By doing so, we can measure the degree of bearish pullbacks. In a downtrend, we work from a high point to a low point. By doing so, we can measure the degree of bullish pullbacks. Now remember, retracements may be used on all markets on all time frames. Let's head over to the Chart Lab and apply this tool on both MT4 and Trading View. Okay, one of the best things about Fibonacci retracements is that they're very easy to apply, use, and interpret. So we're going to go over how to put a Fibonacci retracement sequence on your MT4 and your Trading View platform right now. As you can see, it only takes a few seconds to do so. Right here, we're looking at your MT4 platform, sort of the industry standard for the last decade. You've got your Fibonacci tool right there above your Market Watch window. If you want to give that a click, you'll see you bring up the little Fibonacci tool. You'll notice your icon has like a little list of lines there, and that tells you that the indicator's live. We're going to work from that spike high right to that spike low because we're looking to measure the retracement of this bullish move in price action. This is a 30-minute chart on your Euro USD, and you can see right here you get the nice levels are definitely defined. You've got right here 23.6, 38, 50, 60, 62%, and you could also allocate 78% in there as well. So that's really just a quick look at how to build a Fibonacci retracement sequence on MT4. Now, if you want to go right back over to Trading View, very, very simple as well. You're just going to go right over here into your left-hand margin. You'll notice it's that same symbol. It's just a list of lines. It's just a sequence of lines. You're going to give that a click, and then you're going to go right here. In this instance, we're looking at the Euro USD weekly, and it's a nice bullish uptrend. You can see right there. We worked from low to high because we're measuring the current pullback of last week, and we want to see where price goes this week. And right there's your 38%, your 50%, your 62%, your 78% on Trading View. If you did want to mess with the properties, you just go right to your gear and you can allocate which one of those levels you want to show up. If you want to be exact, you can plug in the coordinates of those swing lows and swing highs, and you also can allocate different colors. You can put in different levels, really tailor these things to whatever you want them to be. So relatively straightforward on both platforms. The quick and dirty of it right here is on your MT4, relatively simple. You can also get in here and sort of mess with the settings here. If you wanted to go to properties, Fibo properties, right there you can just put in your levels you want, the parameters, the way that it's visualized and represented. So very simple on both the MT4 and MT4 platforms. Now that we know how to apply Fibonacci retracements, let's talk about how to trade them. Fibonacci retracements are great for executing trend and range trading strategies. To trade trends, we're looking to buy or sell from Fibonacci levels within the context of the broader trend. This is known as buying or selling pullbacks. For range trading strategies, Fibonacci retracement levels represent the upper and lower bounds of a ranging market. To cash in, the trader sells the upper and buys the lower extreme. This is known as reversion trading. To boost the efficacy of the retracements, it helps to use them on multiple time frames and with other indicators. Let's hit the charts and break down a trend trade and a reversion trade using Fibonacci retracements. Fibonacci retracements can be used in any number of ways, a myriad of ways in the live market. Two of the ways that I favor them and that they are very, very useful is in using trends and rotational markets. Now, the first way that we're going to look at trading a Fibonacci retracement is on a trending market. So right here, we have a weekly Bitcoin chart that really gives us a nice big directional move. Now, you'll also notice that I've added an additional indicator here, and this is called a stochastic oscillator. Now, the reason why I added that stochastics is because momentum oscillators, be it stochastics or RSI, they work very well with Fibonacci retracements. They give us an idea of when price reaches a retracement level, if in fact the broader market is overbought or oversold. And that way they can be very useful. We're going to use them in the rotational strategy in just 1 second. So for the trending strategy right here, we would be looking saying, okay, we've got a nice big directional move here in Bitcoin. It's a nice big 4-week run up and a bit of a pullback. So what we want to do now is we want to think, okay, we've got a bullish move in the market. We've got a bullish trend. We want to join that prevailing price action. And the way that we do that is we use our Fibonacci retracements to draw us a sequence and give us some potential areas that we can enter into the market. So the first thing we do is we go to our Fibonacci tool. We go right there to a spike low, a swing low, and a swing high. Now remember, in an uptrend, you're going to start on that low point and you're going to finish at the high point. You work low to high in an uptrend. Now you can see right here, we've got our Fibonacci sequence. We've got 23.6% right there, 22,375. We've got 38%, 21.2, and then we've got 62% down there at 1932. Now for me, personally, it's personal preference. Once again, there's many different ways to trade these retracements. I favor 38 and 62%. I also like 78% as sort of being a point of no return. As for using 23.6% and 50%, those are always just sort of supporting evidence for me. I don't necessarily like to trade those in isolation. So right here, by looking at this trend, I think a great entry point would be down here right around your 38% retracement at 21,208. One thing that you'll find over time is that holding out for the exact number may not be worth it. Sometimes you have to shade your entry. So in this case, if I was looking to buy into this trend, I would be looking to shade my entry. Instead of 21,208, maybe I would be buying 21,250s or 21,275s or 21,3s, depending on how much I really wanted to risk. So think of these levels. Sure, they can be used in specific on intraday time frames and traded to the exact tick, but in broader time frames, say a weekly chart, think of them more as just an area that you can build a trade around that can really help you get with the prevailing trend. All right, let's go ahead and hit our price action, see exactly what develops. And you'll notice right here, there's your robust pullback right there. Happens 2 weeks later after we get our nice retracement, and your low right there is 21,376. So if you shaded a few $100s, then you got in on this move and really got in on a nice swift directional move with price action. And then as we move forward in time, you'll notice that price just sort of fiddles around, and then we get the big retracement here right down to right around that 62% level, and then we do get our bullish break from there. So one thing that you can definitely do with Fibonacci's is buy and sell pullback. So with an uptrend, you're looking to buy that pullback. In a downtrend, you're looking to sell that pullback. It's a great way to get with the prevailing trend. All right, let's look at a rotational trading strategy. Now, this is a chart. This is a monthly chart for the dollar-yen pair. And if you remember, if you were trading Forex, you remember the epic run-up that we saw during 2022 when the United States Federal Reserve began hiking rates. Well, let's throw a Fibonacci on this because the price, we have a nice big definitive move, and now we've got a formidable pullback in flat price action. So remember, when we're trading reversion strategies, we're looking for flat line markets. We're not looking for trends. We're looking for sideways price action in a way that we can capitalize and sell the upper extreme of a defined trading range and buy the lower extreme of the defined trading range. So right here, we go right over to our Fibonacci tool and we say, okay, what do we want to focus on here? How about 2022's low? Now remember, we don't always have to work from spike lows or swing highs. We can also build sequences based on time. And when you start talking about a valuable trading range, I would say a yearly trading range is extremely instructive, specifically one like 2022, where we saw Fed tightening and we saw the BOJ really holding that dovish ground. So we had a really strong fundamentals that led to a huge rally in the USD JPY. And then towards the end of the year, the BOJ steps in, they start capping bond yields and things of that nature, intervening in the Forex market, and you see this big time sell-off. Since then, we have just absolutely flatlined. So you'll notice what we have here is an extremely instructive trading range, at least for the past several months. If we don't want to count that initial break, we could certainly do something like this over the past, say, 4 months, where you've had a lion's share of business has been conducted between 38%, which is up there at 137.25, and between 50%, which is down there at 132.66. Now, one of the ways that you can bring in those other indicators, specifically an oscillator like a stochastics, is take a look at what we have down here. Now, the market is trading right now on a monthly time frame. We're trading right there at right around 40 or 50. That's the dead center of that stochastic range. Remember, anything above 80 is overbought, anything below 20 is oversold. Right now, we're dead in the center of that. And that really plays into our rotational narrative, meaning the market's not trending. Our stochastics say we are in a point of really equilibrium, pricing equilibrium, and we're not necessarily going to go for one way or the other directionally. So in this instance, we'd be looking to sell the top, which would be 137.25, and buy the bottom, which is at 132.66. Let's take it right down to a weekly time frame. You can see last week you had a great sell. A few weeks back you had a great sell. You had a couple of pretty good buys, a little bit of a drawdown here, but you got established right back up into our trading range. Right now this wouldn't be too bad of an area to target for a buy right down here from support at 132.75 and a sell up there at 137.5, somewhere in there, 137.25 as well. So, and you can even work this down to a daily time frame. You'll notice that our stochastics are still well within the normal range. We had a fantastic sell that came across the board, potentially another buy from these levels. Stochastics are in line on your daily. Let's just take one step back to the weekly, and you'll see your stochastics sort of toward the upper end of the range, but still within that, between that 80 and 20. So we're not overbought, we're not oversold. Theoretically, the market flatlines, and we've got fantastic entry levels. We're looking to sell there, buy there, and we've got a nice established trading range to play. So that's one example of a way to trade a trend using Fibonacci retracements, and a way to trade a trading range, a reversion to the mean type of a strategy. You're looking to sell the top, buy the bottom, profit target somewhere in the middle. You build your risk versus reward on a base 1-to-1 or maybe a 1-to-2, and you can really capitalize on those flat markets using Fibonacci's. So those are a couple ways you can integrate Fibonacci's into your trading strategies right away today. Take them out in the live market, give them a test drive, give it a spin, kick the tires. Tell us what you think down below. If you like this type of strategy, then feel free to use it. If you don't, that's okay. There's more than one ways to skin a cat. Find something that suits you, that is intuitive, and that really plays to your strengths in the live market. Fibonacci retracements are one of my indicators of choice. Day in and day out, I use this powerful tool to craft trading decisions in everything from crude oil to Bitcoin. In doing so, I'm able to trade trends, ranging markets, and identify support and resistance levels very quickly. From my experience, this tool's versatility is unparalleled. One of the best things about technical analysis is that there's more than one way to get the job done. If Fibonacci retracements interest you, feel free to give them a go in the live market. If not, there are plenty of other ways to build profitable strategies. The choice truly is yours. As always, check us out on the socials and subscribe to Forex Signals TV for updates on video drops. Also, if you're looking for market access, give the Switch Markets link below a click. Until next time, trade well, and we'll see you in the HTT Forex Signals trading room.